Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss the K-shaped recovery as data shows strong mutual fund inflows on the back of positive COVID-19 vaccination news. Good for the market. Meanwhile, the economic short-term outlook appears to be deteriorating a bit as shutdowns are back in place. So, Phil, let's talk about some of the data and what you're seeing in terms of inflows.
Yeah, looking at the inflows in the last couple of weeks, it looks like equity mutual funds and equity ETFs in the US have had pretty close to record inflows. So a lot of people getting back into the market, which makes sense given we've seen the markets being pretty strong the last couple of weeks. And obviously the vaccine news on the last two Mondays has been a positive reason to get back into equities. But the longer term, or I guess the medium term data is not looking quite so healthy. So the market flows definitely look like they're looking through the coronavirus caseloads that are happening now and what we're expecting to happen in winter.
Let's take a look at our next couple of charts here when we talk about that short-term deteriorating outlook, because now we're talking about a new round of restrictions. Even Sweden, which was one of the more lax restrictions in the beginning of this, and South Korea have unveiled tougher restrictions at this point.
Yeah, and when you look at the data in terms of where retail spending has been going through, you can see like online food and beverage has actually been above coronavirus or pre-coronavirus levels. And there's been some discussion about the fact that those sectors have also had inflation, while at the same time, you've got restaurants and bars, clothing, malls really still struggling. The headwinds that they've been facing throughout summer have been tough. They're still well below normal levels. Airlines is kind of a classic extreme case too, where although we saw a pickup in travel on the airlines, it's really started to slow down. And I guess the thing that we're sort of looking at, production numbers today were pretty good, as it looks like the goods are beating the services sector as well. You talk about the K-shaped recovery. People are still buying goods, but the headwinds ahead, just looking at sort of the COVID data. And as you said, the expectations that states and countries will be shutting down economies again doesn't look good. So at the moment, all of the backward looking data is actually surprising to the upside still, even though we're looking at more frequent data, which is starting to show some worrying trends.
And of course, the concern with this is the longer this goes on and the longer that there's no stimulus into the system, right? Companies are going to, start to file for bankruptcy on a, more frequent basis. They just can't survive as these smaller, mid-sized businesses.
Yeah, and there's a chart today that actually looks at the cumulative bankruptcies. And it's interesting because it actually talks about companies that took PPP loans, around $500 million worth of PPP loans, and they've still ended up filing for bankruptcy. To your point, they just couldn't last through to the end of the vaccine being distributed. Those industries employ about 20,000+ workers. So that's a lot of people that aren't going to be coming back to work. And there's other data out there that's pretty frequent as well, just looking at employees at small firms. And that's been falling for a good 2 or 3 weeks too. So a lot of the data that we're seeing at the macro level isn't necessarily picking up all of these sort of slowdowns and headwinds that small companies are facing. And a lot of the companies in the services sector exposed to leisure and travel really are having a hard time getting through this.
All right, Phil, thanks for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.